How on earth could a platform predict major world events with such scary accuracy? I mean, we're talking about forecasting election results better than a lot of the polls. Well, the answer is in this new kind of information market, and we are about to break down exactly how it all works. Okay, let's just start with the numbers because we need to understand the sheer scale we're talking about here. This isn't some tiny side project. We're looking at a platform with a valuation of $9 billion. I mean, to put that in perspective, that's bigger than some well-known tech companies out there. And the money moving through it is just staggering. Get this, a single trader, reportedly from France, walked away with $85 million in profit. And that was just from their trades on the 2024 US election alone. This was not a lottery ticket. This was a series of strategic trades in a massive information marketplace. And that one market, just the presidential election, saw over $3.3 billion traded. So what is this platform that's pulling in this kind of money and this kind of attention? So what is this truth machine? It's called Polymarket, and at its core, it's a prediction market. It's a place where people trade on the outcomes of future events. But here's the twist. It all runs on crypto. The best way to think about it is like a stock market, but instead of trading shares of Apple, you're trading shares on real-world events. So how does a stock market for events actually work? Well, it all boils down to a brilliantly simple idea. And it's all built around just two possible outcomes for anything you can imagine. It's called the binary outcome share model. And honestly, it's genius. For any question like, will Trump win the election? You can buy a yes share or a no share. If the event happens, if he wins, the yes shares pay out $1. If it doesn't happen, the no shares pay out $1. And here's the key. The price of a yes share plus a no share will always equal exactly $1. And this right here is the magic formula, the most crucial part of this whole thing. The price of a share directly translates to the market's belief in the probability of that event. So if a yes share is trading at, say, 73 cents, the market is collectively saying there is a 73% chance of that happening. It's a real-time snapshot of the wisdom of the crowd, all based on where people are actually putting their money. So let's follow the life of a trade from start to finish. It all starts with minting. You put in $1 of a stablecoin, and boof, you get one yes share and one no share. Then comes the trading part, which is just the open market where prices for these shares go up and down based on news, sentiment, you name it. Finally, you get resolution. The event actually happens, one of those tokens becomes worth a full dollar, and the winners can cash out. It's a full life cycle. So, how does all of this work without some big company in the middle controlling everything? Well, the answer is in the technology stack. It's a mix of blockchain, stablecoins, and something called a decentralized oracle, all of it designed for speed, stability, and most importantly, trust. Let's break this down. There are three key parts here. First, it uses the Polygon network, which basically just makes transactions really cheap and really fast. Then it uses USDC, a stablecoin, which is huge because it means you're not also betting on the wild price swings of crypto. And finally, and this is probably the most important part, it uses a decentralized oracle called UMA. Think of an oracle as the referee. It's a neutral service that feeds real-world info, like election results, onto the blockchain to prove what happened. That means no single person or company decides who wins. It's all trustless. Now, it's really easy to look at all this and just think, okay, it's another gambling site. But there is a really fundamental difference between Polymarket's model and the traditional betting world we're all familiar with. In traditional betting, you are always playing against the house, and the house always has a built-in advantage. On Polymarket, you're trading peer-to-peer with other users. There is no house. This also means you can sell your shares at any time before the event is over. If you think the odds are changing, you can lock in your profits or cut your losses, just like you would with a stock. Yeah, traditional sportsbooks use what's called a vigorish or a VIG. Their odds are designed so the implied probabilities add up to more than 100%. That's how they guarantee they'll make a profit over time. Polymarket's probabilities, on the other hand, always add up to exactly 100%. It creates this pure, efficient market where a skilled trader can actually profit consistently. But this powerful tool has a really dark side, because when you can trade on literally anything, and I mean anything, including life and death events, you run into some very, very serious ethical and regulatory problems. Yeah, the platform has faced some major controversies. There have been serious allegations of insider trading. For instance, claims that military personnel have traded on strikes they knew were coming. Journalists have reported getting threatened by traders who were trying to manipulate their reporting just to swing a market in their favor. And beyond that, you have these huge ethical questions about the very idea of creating financial markets around wars or assassinations, or even nuclear detonations. And this quote, it just really sums up the whole conflict perfectly. This technology is here, it's out there, and it's incredibly powerful. The real challenge, the real question is whether we as a society can figure out the rules for this thing before the negative consequences get totally out of hand. So, what do you think? Is Polymarket this revolutionary tool for discovering truth by literally putting a price on it? Or is it a global, unregulated casino that has some really dangerous real-world implications? The answer isn't clear at all. But one thing is, this technology is here to stay, and we're all going to be living with the consequences.